Good afternoon to all participants. It's now time for panel sessions. Today, with my colleague Olzhas Tuleuov, we'll discuss the intermediate results of the digital Tenge project. We will try to address to have the digital Tenge. Let's move on to the next slide. The central bank digital value currencies is now a very widespread topic throughout the world. 26 countries are piloting their prototypes, platforms, and 2 regions have implemented. China is, basically operating this project. Currency is something that we're living with. There are 3 main reasons for that. Involvement of public, the so-called financial inclusivity. Second is to improve the national payment systems. And third is to protect from money surrogates. Next slide. We can see the approach taken by the National Bank. In May this year, we published a report for public discussions where we captured our vision on the definition of the digital currency, on its design, and this report laid the basis for discussion of digital currency. So this discussion was held with consumers and with market participants. A big contribution was made by international experts. We have had over 15 meetings that were attended by over 1,000 participants. This allowed us to form the right basis for future research. In parallel, we started on a prototype project. So all in all, this work will lead us by the end of the year to a white paper that will demonstrate the results of this year. And in our white paper, we will try to outline our future steps. Now, let us discuss how we built the pilot. So we identified 6 properties of digital currencies. First, the inclusion of the owner's data into the token. Second is programmability. Third is high level of fault proofness. Fourth is online and offline. So possibility for transactions online and offline. And fifth is the interoperability, seamless integration with other blockchains. And sixth is the effectiveness of the settlement chain. Now, all these attributes, potential of digital Tenge, allow us to modernize national payment systems in these 5 categories that are shown here on the slide. The programmability fact allows us to create new fintech services, which increases supply of these services in the market and stimulates competition. Second, use of smart contracts can be a serious infrastructure for enhancing infrastructure of payments with the participation of state. For example, state procurement, distribution of social benefits. Third, additional infrastructure elements in it affords uninterrupted national payment system work 24/7. Fourth, the possibility of payment offline. This will be an instrument for further penetration of non-cash payments, especially in remote areas with bad internet connectivity. And fifth, it is increasing effectiveness of trans-border payments. If we, for example, have integration of digital currencies of different countries. This slide shows the approach of how we formulated the technical specification to this pilot. Based on the hypothesis that I've just mentioned, we formulated use cases, we analyzed them together with experts, with regulators, and we ended up with a list of scenarios that we are testing, and we're trying to find whether we can have the attributes that we were talking about. So we have 9 scenarios of the pilot project. 3 of them are user stories, testing digital Tenge in real-life situation, and 6 are basic functionality of any payment system, issuance, possibility of opening an electronic wallet, etc. And the 3 user stories were concentrated on 3 key advantages, potential advantages of digital Tenge. First is payments offline. Second is use of digital Tenge for social payments. For example, there will be a task to form a social wallet with certain properties, with certain restrictions on it. So we check that. And the third thing is, of course, such infrastructural projects require involvement of professional market participants. And it was important for us to check how real it is to integrate existing payment entities, their interfaces, into the digital Tenge platform. And we also found it was implementable. In the technical assessment of hypothesis, we developed new approaches. For example, we had a new approach on the functionality of online payments. We had a new approach on the security of transactions in the large sense of the word, the insurance of anonymity, balance between anonymity and money laundering and financing terrorism. And third, it is targeted use. So there is technical possibility for tokens with special purpose as opposed to special tokens versus general tokens. So let me describe what the digital Tenge is capable of. Offline payment, programmability, integratability, recording of ownership into the token. So if we look at the offline transaction, how it is organized, so there is a distributed register. So there is the national bank node and the notary bank. There are also Banky and Bank B nodes. People, businesses and consumers open their wallets within these financial institutions. For example, a client who wants to buy has their wallet in Bank A, and business has their wallet in Bank B. Let's imagine that both these devices, both these people are offline, there is no internet. How is it going to happen? First, of course, the business raises their invoice, and the consumer using their device makes the payment. So technically speaking, signs the transaction. The 2 people sign the there are 2 signatures, by the customer and by the business. As soon as one of them goes online, it can be client or business, this transaction automatically is sent to the bank signs it, and the bank forwards this transaction to the node of the central bank to validate it for whether they use real tokens or not. And the central node validates token, and the central node distributes information about this transaction throughout the whole blockchain, and the transaction is considered complete after that. This is how it works offline. The technical details, what was implemented, how it will be done, we will capture this in the white paper. Of course, there are still certain technological risks related to offline payments. There can be advanced attacks like double spending. I think we need to approach it in an integrated way using both technological and regulatory instruments. This slide shows what blocks we will work on to mitigate these risks. But in detail, we will describe this in our white paper. paper. Let me give floor to Olzhas Ayazbevich. He will address the economic aspects of digital Tenge. Thank you, Bijan. Dear participants, allow me to continue our description of our status of the digital Tenge project. In our first report, in our discussions with the public, apart from technological issues, a lot of people are interested in how digital Tenge will be integrated, will fit into the economic system of our country, how it will affect the macroeconomic stability and the transaction business of financial organizations. This is what we are going to address in our talk. So our vision of how we picture the integration of digital Tenge on our economy, let us look at a theoretical model. This model is not final. It can be amended with our research. In this model, we provide for 3 economic agents. This is all very simplified. These agents are the National Bank as the regulator and issuer of the digital Tenge, Bank A, second-tier bank, and the customer, which we call Alibek. Also, it's very important to understand that to see how digital Tenge can affect the economy, we need to also look in parallel at indicators of monetary review. The RM indicators and the money mass, as they call it. So we reduce the money mass to a certain minimum. So we have in the end several. So to understand how introduction of CBDC can affect the economic process, it's important to understand the design chosen by the central bank to introduce digital currency. This slide shows the design that we are now considering as a priority. It stipulates that the National Bank receives an order for the issue of Tenge, and the sum is accrued to the Bank A account, and this is how the money flows from National Bank to the second-tier bank. Now, from the standpoint of liabilities of our 3 agents, and there are 3 balance sheets. This is initial situation without digital Tenge. The money base here is 4,000 Tenge. It consists of cash and corresponding account of Bank A, which is in the liability of the National Bank. And we also provide that there is a certain volume of M1 money mass, which includes cash, current accounts with the bank, and the accounts of other clients. The first iteration requires the issue of 1,000 units of digital Tenge. In this case, what happens? The National Bank replaces this amount of funds with a digital account, and this account gets into the assets of Bank A. And so what do we see here? The main implication that the money mass does not change, only its structure changes. The next stage is about involving Alibek, the client. Alibek orders Bank A to send this issued digital Tenge in the amount of 500 Tenge, and the corresponding account with Bank A gets down, and these funds end up in the assets of Ali Bek, what do we see? We see that there is a process of flow from Tenge, digital Tenge into money mass, and the size of the money mass does not change. What we have here is just the change of its structure, namely the reduction of current accounts and increase in cash, M0DT. So as a summary of this model requires that the issue and the launch of digital Tenge does not expand the money mass and the money base. It only changes the structure of money supply. It replaces some of the supply with some digital cash. Now let's look at some key issues. So how, based on this model, the introduction of digital Tenge a little bit. As I have said, the issue of digital Tenge will increase cash M0 from classical or Keynesian theory. We know that the increase in the volume of cash leads to the acceleration of money turnover, and the speed of money turnover affects demand and can stimulate prices and inflation. As I have said, when digital Tenge is issued in the money mass, the current accounts are replaced with cash, and there will be less money created, and because there is less current accounts, there will be lower loans issued, and the multiplier will be lower. So first we have increased speed. Second, we have reduced money multiplier. These two processes can level each other off, and in this design the impact of the issue of digital Tenge on inflation processes will be coming down to zero. So the issue of digital Tenge should not significantly affect inflation processes and the monetary policy. Another important thing is how the issue of digital Tenge can affect financial stability. Let's start with the fact that since the money mass reduces the current accounts because of growing cash, it can theoretically lead to proxy deficit of liquidity, which can entail increase in interest rate. But because the volume of issue will be proportionate to the current cash level, even with proxy deficits will be lower, therefore there will be no significant impact on interest rates in the economy. Another issue is about digital escape. Digital escape is flow of current accounts into digital currency during crisis. So as population trusts national bank more, the public can prefer digital Tenge to their current accounts, but we are certain that national bank has all necessary instruments, monetary instruments, and there are instruments for macroprudential instruments. We also have instruments of limiting the transfer of currents to digital Tenge. This should reduce the risk of digital escape and proxy liquidity deficits. So therefore we also think that the digital Tenge will not significantly impact financial stability. Another issue that was discussed largely
is that the digital Tenge can put them in a vulnerable state, because at some point it can compete with transactional business and financial organizations. But in spite of that, I'd like to note the advantages that can arise from the issuance of the digital Tenge for the financial institutions. In particular, the implementation of the digital Tenge can help them increase the coverage with financial services of potential customers. And also the issuance of the digital Tenge can help develop absolutely new fintech products. So far, we're only suggesting what these products can be, but that's for the market to decide. And we're sure that such a new instrument as the digital Tenge will increase the development of fintech in Kazakhstan. And the last advantage is one of the last advantages I'm going to talk about for business of the digital Tenge is that you will have a platform-based business model which stipulates for a reduction of the dependency on business, dependence on transactional model of earning money. So the digital Tenge can change that paradigm and help them build new products. As the model is theoretical currently, and we don't have enough empirical data so far, we plan in the next year, when this project continues, to do more research, consumer research, to research the behavior of consumers. And this research will help us get the necessary data through which we can digitize certain things that we've tested in our theoretical model. And perhaps we will see some vulnerabilities. Perhaps we will understand that the journey selected is correct. And all of that will be in our final report. And I'd like to add here that everything specified here will be more expanded in the report, and me and Mr. Binur are open to all questions. You can email us or write to our social media accounts, and we're ready to answer all your questions, listen to all your suggestions, so you're welcome. And that's pretty much it for the economic aspects of the digital Tenge. Thank you very much, Mr. Tuleuov, for the detailed explanation of the economic aspects and of our thinking overall in regards to the issue. We wanted to really present our framework today, those theories that we have currently. Of course, this will become more complicated with the growth of data, but this is roughly how we see the project right now. And if you read our report, of course, then you would know that this year we plan to develop the project in 5 stages, and at the end of this year we plan to publish the report about the outcomes of the final pilot project, where we will in detail bring to light what we just talked about in writing, where for each aspect, each economic, methodological aspect, we will have an explanation. That will also include the opinion of the expert community in relation to these issues, and I think this will be a major contribution to the discourse of the digital Tenge. An important issue we wanted to note is that always for the national bank, in its decision-making model in terms of the digital Tenge, first of all, the consumer will be as a focus. For us, this is our main metric. If all of our research and our discussions with the market, with the experts and experiments prove that the consumer will win as a result, then of course the corresponding decision will be made. If not, then not. But so we do weighted analysis. And this was just a brief review of the interim results of our pilot project. Now, I'd like to note here the big significance of international experts in studying this issue. From the very beginning, they have always been with us, and they've been making their contribution, and really hope that Kazakhstan and the National Bank have made their contribution to the global research agenda. So in part 2 of today's panel session, we will do a little discussion, live discussion. Will be moderated by Dr. Ousmène Jacques Mandeng. That is probably one of the leading minds in the sphere of digital, central bank digital currencies and using blockchain for banks in general. So I think he's a great moderator for today's session. And Ousmène, it's nice to...
Thank you.
Hello? Shall I start?
Yeah.
Very good.
No, thank you very much. Thank you very much for the kind words and the introduction. Let me just kick it off straight away. So looking forward, we have a fantastic panel to address some of the key questions that were also part of your introduction. I would just like to sort of set the frame and then kick it off with the first panelist. But I think if we take a step back, clearly central bank digital currencies, they are on the rise. There's no doubt about it. I have no doubt that they will be introduced by many central banks over the next few years. But I think it's also important to sort of keep in mind that their adoption is not uncontroversial, and that we do have pushback, in particular from some of the incumbents. And I think, if you take a historical perspective, I think it is interesting to sort of reflect on the fact what CBDC really is. I mean, for us, it is very much the introduction of a new medium. So we have banknotes today, and we have book entry monies or reserves, and in the future we may have tokenized central bank money. And really the innovation is the adoption of a new medium, of a token that will allow certain transactions that the conventional mediums we have today simply cannot perform. And I think it is quite reminiscent of the debate we had with the introduction of modern banknotes in the 19th century. Very controversial at the time as well. Paper currency was seen to be highly inflationary and to cause major disturbances in a system that was then dominated by specie payments, so silver and gold coins, and also the very introduction of central banks at the time. I think it's fair to remember that the United States took a while to introduce a central bank, only in 1913, and at the time same concerns that we hear today from CBDC, namely, a big central bank, a big government institution will step in and it will crowd out private banks and private transactions. And very much the same debate we have today when it comes to concerns by the financial sector regarding the introduction of a potential CBDC. I think let's remind ourselves, CBDC is not necessary to do everything better, but it is very much about the diversification of payments. It is to equip central banks and central bank money with new functionalities, to extend utility and reach of central bank money. And I think it is therefore very much about ensuring that going forward there will continue to be equitable access to the central bank's balance sheet across a broader range of financial market infrastructures. I think this is very much what CBDC is about, and it will lead to some extent. And here maybe we need to be cautious also to a new division of labor between the different monies that we have in our economies. And I think it'll be a debate between private monies versus central bank monies. And I think one concern could be indeed that CBDC may increasingly encroach onto transactions that are now conducted in bank money. So that certainly is a concern and merits reflection. And we also have, with the new functionalities of CBDC, possibly a new division of labor between fiscal and monetary operations. I think here it's also key that we preserve that boundary between fiscal and money, and where CBDC may represent a new infrastructure, it should not lend itself necessarily, certainly not by the central bank, to start doing fiscal operations, which obviously should remain with the government. And then I think a last possible new division of labor is between national and international currencies. CBDC, I think, will have a particularly large impact on international transactions, where it lends itself better to serve as a settlement medium for international payments. So here also we are likely to see possibly a new division of labor between national currencies used in international transactions. And I think this is where possibly we can have one of the greatest contribution of CBDC, is also to allow smaller currencies to play a greater role in international payments, and thereby help to sort of rebalance the international monetary system as we know it today. So to kick it off, we'll address three different types of questions. We start first with actually Lannquist. which we've met a few years ago, and who's very active at the WEF and does fantastic work there. Ashley is going to focus on financial inclusion, I understand. Ashley, please kick it off. We have all 5 minutes going forward, so be sharp on the time, and please, the floor is yours, Ashley.
Thank you, Ousmène, and thank you, everyone, for having me. It's great to speak with you. So I'd like to discuss the topic of CBDC and financial inclusion. We could go to the next slide, please. Financial inclusion is one of perhaps 8 specific policy goals that one can describe for CBDC. And for emerging and developing economies, it's right about at the top priority according to January BIS survey data, along with domestic payment system efficiency. So what I'm showing here is the 8 policy goals for CBDC and financial inclusion and domestic payment efficiency right up at the top. Many of these other policy goals were introduced in the opening remarks, such as the fiscal relief payments and improving payments and banking competitiveness, and some others. In many cases, success of CBDC towards these goals isn't 100% guaranteed. So what I'm also going to try to do in my remarks about financial inclusion is illustrate the challenges associated to keep in mind as advice. Next slide, please. So the general premise of CBDC for financial inclusion is that the CBDC can create a lower cost or more widely accessible saving, deposit, or payment service. Basically, we could increase the access to and use of valuable payment or deposit saving products and services to people who might not have access today within the jurisdiction. How might this happen? Perhaps, although not necessarily, the public sector could sponsor or subsidize the fees or costs involved. This could be with a public-private partnership of the telecom industry, or offering free service, free hardware even, and of course, avoiding any fees associated with the accounts. They have no account minimums or no extra fees. It could also be the case, perhaps, that the central bank may be willing to offer CBDC with lower know your customer or government identification requirements than the private sector currently offers. I believe that this is part of the value proposition of the Bahamas early CBDC. And then third, it could be the case that a CBDC, from a technical perspective, can itself fundamentally achieve lower costs and lower complexity for domestic or also cross-border payments if it's avoiding the more expensive interactions of commercial banks because transactions settle directly with the central bank accounts. So that's the picture of how this could work for financial inclusion. Overall, one can say that this fills a gap for a low-cost, convenient, or reliable savings, deposit, or payment service that the private sector has not yet provided. Or in other words, the theory is that there is demand for a service that is unmet by the private sector, and the public sector has the capability and willingness to step in and provide it. Next slide. So it's important to think about and emphasize how the public sector is performing something that can't be achieved by the private sector for this particular use case of financial inclusion. Where does CBDC enable a capability that cannot realistically occur with public policy or the private sector? Where does the private sector potentially lack incentives to do so, and expenditures of political or economic capital then would be incurred with other policy instruments? So big recommendations here as well are really considering where something is not feasible, not being done by the private sector. Sometimes we think, or it's said in CBDC, that the CBDC could enable open loop interoperable payment systems. but that's also something highly achievable in most countries in the private sector. Also, many public policy interventions can help improve financial inclusion, such as regulatory limits on bank fees or account minimums, deposit insurance requirements for safety, or financial education campaigns. Obviously, all of this is highly dependent on the specific jurisdiction, and I'm speaking in only very general terms, but this is just general guidance. And lastly, it's important for any of the policymakers considering this issue to have a very clear identification of what they want to achieve with financial inclusion and why certain populations are unable to have access today, and how it is that CBDC addresses those specific barriers. It was mentioned earlier about offline payments. So if the necessity is to create offline capabilities, then one must design accordingly. Lastly, it's not impossible that the CBDC worsens inclusion and can actually widen inequality or gaps in access to the digital and financial services if they are not appropriately considering how to address and resolve the barriers to inclusion that people experience. That is a bit of a warning. And that is all for my talk, and I look forward to the continued conversation.
Thank you very much, Ashley. And I think it's important indeed to sort of highlight that fiscal inclusion may not necessarily be something that really central banks should be concerned with. It may be the government that needs to look after it. But the good points definitely you mentioned. So we're moving to Willy Lim, who works for R3, who is offering one of the key blockchains when it comes to CBDC, Corda. I have to say that in many central bank experiments I've been working on, we are using. So Willy, please go ahead on programmability. What does it all mean?
Thank you, Dr. Ousmène. It's good to be here today. And yes, I would like to discuss a topic around programmability. Next slide, please. As central banks continue to progress on CBDC, learnings from high-profile projects, as Dr. Ousmène has suggested, that it is apparent that CBDC is not just solely on digitizing a legal tender or facilitates instant settlement. We also need to consider, like in other words, efficiency is just only the beginning. We see analysis are now being put forward, rippling to other focus areas such as distribution model, AML compliance, addressing digital literacy, as like what Ashley is mentioning around like closing the gap of financial inclusion, and most importantly, the impact to the ecosystem. After all, CBDC is a universal social utility. With an appropriate technology in place such as DLT, AI, overlaid with governance and policies, it has the potential of addressing current challenges from fraud mitigation to enabling a vibrant ecosystem that promotes inclusive and competitive landscape. And we're starting to see important features brought by this technology that gives policymakers a tool that has a potential of creating positive implication to the ecosystem. Now, programmability is one of these features that is now subject of being under discussion and being piloted by several projects. Next slide, please. Now, programmability is a new concept that has been introduced by CBDC. When talking about programmability of CBDC, let's first explain the difference between programmable money and programmable payments. The two terms are often used are interchangeable, but in fact they are completely different. Before I explain programmable money or programmable CBDC, let me start with programmable payments. The term programmable payments refers to an innovative way to transact payments which offer functional benefits, enable new processes, and support new business models. Basically, it's programming transactional payments to behave in certain ways that will achieve a definite outcome or objective. For example, fraud detection. Now, programmable payment without programmable money can be less efficient. This is because programmable payment will need to be applied to various channels used by payers and payees. Now, with plethora of digital channels, as you can see, there are several channels being introduced out there. This will be challenging to enforce standardization, consistency, and obviously it's also cost. Now, if this is not addressed, this may lead to a higher barrier for competition, resulting to potential concentration risks. Now, next slide, please. Now, let me focus on programmable money. Now, unlike our traditional fiat money, which is analog, CBDC enabled by what Dr. Ousmène suggested earlier, a smart contract, has the potential to be programmed by policymakers to behave certain ways with an intended outcome. Now, for example, we're bringing characteristics to a CBDC, such as like we can assign rules such as like who can be a bearer, the type of transactions that it can be used, or we can set future dated payment events. Now, in other words, rules can be wrapped on the CBDC to have a defined and deterministic characteristics. Now, this program can now be embedded in CBDC, executed, and move across in the ecosystem. It can allow traditional distributors like the financial services or payment service providers to embed additional rules as well, unique to its organizational requirements. So could be like compliance checks, such as like limit enforcement that requires a secondary validation or validator or verifier before a CBDC payment can be finalized between the payer and the payee. Now, next slide, please. Now, let's now review the levers of programmable money. Let's take a deeper analysis. We can now conclude that we are not just making money more efficient via digitization, but enabling the purpose of using money more efficient and more relevant as we head towards like a cashless society. Now, for example, at the bank's levels, programmable money is widely thought can reduce the cost of AML operations. Now, not only it will eliminate duplicate processes siloed by individual bank processing, but it also promotes standardization of mandatory rules being enforced by regulators. Now, for payers and payees, CBDC can be configured that can solely be used for purchase of certain goods, such as like, or CBDC enforcing prevention of illicit transactions, or for regulations to be able to prevent such as like minor from purchasing like alcohols, for example. Now we're starting to visualize of implementing more efficient programmable payment use cases, of course with programmable CBDC. Now next slide, please. Now these are just a highlight of some of the application of potential like application of programmable money. Now I provided here are real life examples on where policy can be programmed. For example, like birthday cash gifts, such as that being distributed by the Italian government to the citizens for cultural activities. Now, other examples could be like as alternative to food vouchers or program rules, such as I mentioned earlier, for children spending money. Now, this is where this will get interesting. Now, let's assume we retain the current intermediation model, where a commercial bank continues to be distributor of CBDC. We can see applications and innovation beyond the payment use cases. Now, for instance, financial services with programmability can model CBDC as a loan contract where disbursement can only happen as long as it matches the purpose of the loan. No other example like CBDC can be wrapped with similar to like a post-dated checks where CBDC can only be used with a future settlement date. This allows businesses to use CBDC as a collateral similar to invoice financing, further improving access to loans. Now, another real-life example where we at Arif are working in collaboration with the Public Debt Office and the Central Bank, where modeling CBDC is a retail savings bond with a feature of payment instrument that allows the payee to be able to earn interest coming out from the bond. Now, this is just some of the examples, and there are definitely endless possibilities and more use cases, and there are also considerations that we need to consider. Now, let me end my presentation with a proposition. I would like to challenge and inspire the NBK and the community in Kazakhstan, the fintech community, to think about the potential application of programmable money. Thank you for this session, and over back to you, Dr. Ousmène.
Thank you very much, Willy. Very interesting indeed. Programmability is one of the key features, the novelty that comes with the adoption of token. And last but certainly not least, Arif, Ismail with the International Monetary Fund. I hope the fund will see in CBDC a possibility to improve the international monetary system, of course, going forward. Please, on monetary policy, what can CBDC do?
Fantastic, Ousmène. Thanks for having me. It's always a delight to be in touch, and the discussions have been absolutely stunning. So maybe next slide. I want to start off maybe a little bit differently, so bear with me. I think this is a complex topic. I think the discussion so far has already raised a number of really key matters on monetary policy as well as financial stability. So I'll just provide an appetizer, Ousmène, in the 5 minutes or so. But I thought maybe a good thing to do is just to take a step back before just diving into impacts on monetary policy and financial stability. And in reflecting on just taking a step back, I thought to myself, you know, let's say we get to the end of time, that there's such a notion. We get to the end of time. And we ask ourselves, Ousmène, what is the greatest invention that would have been created by humankind? I put my money on money. You know, when I think about it, I think it's probably the biggest, greatest technological innovation ever. And then I ask myself, what's the second greatest innovation? And I put my money on the interest rate, interest on money. And having said that, I sit back and I reflect and I think, wow, money and the ability to link interest to it. And when I sit back and reflect on where we are, just hit the pause button, I kind of look at this diagram and I go, from all the comments that all the speakers have made, including yourself, we're at an incredible moment. You know, whether it's private money as you captured it, you know, first generation crypto assets like Bitcoin or stable coins, or even, as you point out, you know, this new medium, as you described it, central bank digital currency. It's an incredible moment to be at, and to think about the different design aspects. And of course, I think the initial speakers, Binur and so on, have captured a number of different design aspects. But there are two that I want to focus in on from a monetary policy perspective. Next slide, please. So the two that I think, in reflection, that would have potentially the greatest impact on monetary policy is levels of access. And by that I mean who gets access to the CBDC as an example, right? Would that be the larger citizen base? Would that be the wholesale market? Would that be non-residents in a particular jurisdiction like Kazakhstan? Or would that even be residents in another jurisdiction? To your point about the cross-border and international dimension. So I think this variable, which is the level of access, is quite an important one to think about in terms of design. But certainly the bigger variable from a monetary policy perspective is going to be the level of remuneration. What would the interest rate be on such an instrument? Would it be zero? Would it be positive? Would it be slightly positive? Would it be negative? And the question then is, for central banks, why would you even be considering this? And generally in the literature and the debates and from central bank practitioners, two things have emerged. First one is, there's a potential to strengthen the pass-through policy rate to money markets and deposit rates and so on. And the second, of course, is in unusual times as we've been, is to alleviate the effect of lower bound. And this is the rate at which it becomes profitable for commercial banks to strip money back, you know, into cash. And the thought that then strikes us is, well, if those are the two things, well, do central banks actually need a new instrument to effect the monetary policy? And generally, the debate so far has been, we do not think that there's a need to strengthen the pass-through rate through CBDC. And therefore, you know, if you design it based on, you know, having potentially zero remuneration and mimicking cash, you would have very limited impact on monetary policy. And the way that you buy, as has been described, cash, etc., would be the mechanics that get implemented, you know, for a typical CBDC. And again, you know, there's been debates around, well, would it actually address the effects of a zero lower bound? And again, it depends on whether larger denomination notes, etc., are stripped. So if I had to sum up this particular angle, I would say the practical implications then are that depending on these two variables, you know, you could have very large implications, as you captured in your initial remarks, on the balance sheet of banks, central banks in particular, But generally, so far, that is not what we're seeing in the particular designs that are emerging. The designs are very much based on some of the other speakers like Ashley and so on addressing financial inclusion and those matters. Then my last slide, so next slide please. I think the second speaker captured this all very well in terms of the implications on stability. And very quickly, 3 thought experiments again to conclude. So the first one is, what happens if you design this like digital cash and pretty much that's all that you impact? And I think we would all agree. This would just be a substitution for cash to digital cash, and the impact on financial intermediation would be very low. But the reality is that the likelihood is that you're going to find that some aspects of substitution for deposits will be occurring. And that's dependent on a whole range of factors. And I think the comments have already been well captured. What could the implications be if there is a strip to some of the deposits? You could see banks increasing their deposit rates. You could see increases to lending. You could see increases to transaction fees. You could see shrinks to commercial banks' balance sheets. But all of this, as has been pointed out, could be very carefully thought about in the design with the use of limits and so on. So I'll conclude by saying increased or decreased stability risk. And my punchline would be, well, it depends on the design, as has been captured early on. So I'll pause there. We're probably running out of time. And my tagline would be, keep calm, design, but design is not easy. Keep in mind these 2 particular variables and good luck. Look forward to the discussions as well. Let me pause there, Ousmène. Thank you.
Thank you very much. Very, very interesting remarks. And I think indeed, access, it is the combination, I think, of CBDC and reviewing access policy, which I think really gives us or approaches us to sort of a new dimension that CBDC can provide for central banks. Now, we have been invited now by the NBK to comment briefly on the project that they are implementing. The retail CBDC, as had been described by Binur in the first session. So I would just kick it off, and the idea is really just to briefly comment what are your sort of the key insights you see from what had been presented, and possibly comment on what could be possible steps going forward. I think from my point of view, I think of course I congratulate NBK to have taken it to that level. The consideration for implementing a retail CBDC, again, I think it is not so much CBDC as a payment instrument, which I think is interesting, but it is very much as a settlement infrastructure, how it can improve, not necessarily at the front end, but in particular at the back end of processing payments and establishing an alternative to what are the current core systems that basically rely on very indirect payment relationships that tend to be fairly intransparent, slow, and to some extent quite costly. So the check clearing, the card networks, the ACHs, this is where I think CBDC can play a key role. So if it's not so much as a payment instrument, but certainly as a settlement infrastructure, I think it can make a significant contribution on how we think payments should be processed in an economy. I think coming back on the point I raised on access, I think access will be key. Hopefully, as a possible next iteration, giving consideration how could the Tenge, a digital Tenge, serve possibly in regional transactions to promote a regional financial integration. Can it be more effective in particular? To some extent, could it maybe replace even reliance on mostly third country currencies for conducting international trade, and thereby promote potentially what could be a new periphery for the digital Tenge and possibly other currencies in that area. So just a quick view here on the project, and please, Ashley, offer us your thoughts now.
Thank you, Ousmène. I also congratulate the NBK, and I was surprised last year, I believe, when the first announcement came out and how rapidly you produced the initial draft report, and how focused you are in this research, and that you'll be producing another report, I suppose, next month, it sounds like. I agree with the previous remarks and emphasize the need to identify a clear set of policy goals and ensure that CBDC is truly the best solution to meet those specific goals, as opposed to other alternative policy solutions or technical solutions or solutions that could be found in the private sector. That's a general remark to all countries, and just one that we at the World Economic Forum feel is imperative given the risks and costs at play with the introduction of the CBDC.
Very good. Ashley, that's it?
That's it.
Okay, very good. All right. Willy, please, if you could offer us your insights on the NBK project.
Yeah, thank you. And again, I would like to relay my congratulations to the NBK team. This is really, I've been with a lot of projects with CBDC. This is usually a humongous Hercules task. In fact, technology is just only probably the easiest among when it comes to delivery. The one thing that I really like and called out is really the application of offline payment and addressing digital literacy. I've gone through a lot of projects. I myself also have been an experience of being an underbank, moving to another country. Things like this, we usually took it for granted, but I'm hoping that with this, whatever the outcome of the study, will help address and close that gap. And I can see, like in one of the recent report that I did, the digital literacy is a massive problem even in the current state. So I'm hoping that with CBDC, with the right policy in place, acting is really like a true issuance direct with a legal tender that promotes trust. This will hopefully encourage the developers, the application builders to design a more, I would say, like friendly, easier usage for how you use CBDC, while at the same time without compromising risk and security. So yes, and again, congratulations to the NBK team, and I look forward on the next phases of this project.
Many thanks, Willy. And I think it's important indeed to remind ourselves that the discussion we have on the very basic aspects, like what is money really, and certainly what is the division of labor between central bank money and bank money. I think this is where CBDC has already made a great contribution in that it allowed citizens sort of to reflect on these issues that we took for granted, but in fact they cannot be taken for granted. Arif, please, if you offer us your last comments.
Thank you very much. I think, you know, it is again highly impressive to be able to sit back and observe this project as it goes through its different phases. And what strikes me about the approach is just the very discipline of thinking about this CBDC through multiple kind of dimensions, whether that's the legal dimension, the technical dimension, the operational dimension, the monetary policy and financial stability dimension, the economic implications, etc. It's highly impressive to see this kind of disciplined approach. What strikes me in this is that it's not just words, it's not just showcasing, marketing, branding, if I could put it that way. You know, when I think of the key kind of 6 features and functions described earlier on, the 9 scenarios, you know, with the 3 use cases, you know, as well as the clinical thinking around, well, we've got a theoretical model, we think about what the implications may be, but we're very open, very humble in terms of learning from the data, the empirical data. I think these are wonderful kind of design elements and wonderful in the approach. My sense again then is, you know, if I had to conclude, is to say the reason why I keep saying design is not easy is that we only know what we know now. Some of the unknowns we'll get into, and the unintended consequences as things hit in the real world. And therefore, I'm very humbled by this approach by the National Bank of Kazakhstan, and truly look forward to seeing what comes out of the empirical data. My humble pitch would be, we can certainly help as the IMF in terms of providing support, in terms of doing analysis, especially from an empirical perspective, and we look forward to continuing to help where we can. So I'll finish off with those words, Ousmène. Thank you.
Many thanks. And I'm conscious of the time, so we are on the hour. Thank you. Many thanks to Ashley, to Arif, to Willy for your remarks. I pass it back to you. Just a final comment. Many thanks for the initiative, for having invited us here, and for the opportunity to sort of comment on the exciting project that you're pursuing. Many thanks. Binur, back to you, please.
Thank you, Ousmène. Thank you, dear colleagues, for your warm wishes and words. Once again, it's a great pleasure to having all of you with us today, because I think your input is invaluable for our project, for everyone in this panel actually put their, some level of thought to our research. So thank all of you. Уважаемые коллеги,
Dear colleagues, now I think our panel session was a success, and we've managed to discuss at which stage of the project we are now, where we're moving further, what the international experts think about that. And I'd like to say once again that in December of this year, 15th of December roughly, we will publish the final report as a result of the pilot project of the digital Tenge, where we will demonstrate which achievements we have and the results that we have, and we'll share our thoughts about where the project is going to head further. So let's keep in touch, and let me pass the floor to Olzhas.
Many thanks for your support. I think that we will continue our work, and it is a big pleasure for you for your support, and I think that your opinion and your work and your involvement in our work, it means I think that it can be a huge contribution for achieving our goals. Уважаемые участники.
Dear participants of the panel session, I'm really happy that you were here with us till the end. And one more thing I'd like to reiterate, we are truly open to any kinds of questions, and we do have accounts pretty much in all social networks. Our corporate emails are available to anybody who wants to find them. So please write a message. You can criticize. You can. It's better if you say something nice, I guess, but we will be happy about that. But still, we're open to cooperation, and this will just make us better. So thank you very much. All the best.